Well, South Africans have in recent weeks become increasingly worried about the massive drop in the rand-dollar exchange rate. Coupled with this, the Reserve Bank is expected to hike interest rates on Wednesday. Also, the oil price has dropped to lows last seen in 2003. And if you are wondering what this all means for you, well, we've got economist Iraj Abedian, who joins us from our Sea Point studios in Cape Town. Iraj, thank you so much for being with us. Welcome to Morning Live.
Thank you very much, and good morning to our viewers.
Certainly a rocky start to the year, isn't it? I mean, it's just watching the currency is something that can scare anybody. Let's get your interpretation of what's happening with our currency.
Yeah, I think it is a very unsettling start to the year. What's happening to the rand is primarily driven by two factors. One is global. We know our largest trading partner, China, is going through a fairly complex economic rebalancing, and that is causing all kinds of volatility in the global financial markets. And of course, South Africa being a small open economy or a small fish in this big pond is feeling the impact. At the same time, we know commodities are going through a down cycle. You mentioned price of oil, but when the price of oil is so low, so is the price of all other commodities, and we are a major net exporter of commodities. So our economy is getting hammered on the international front. Yeah. But we also got another reason for our rand being both volatile and losing value, and that is primarily domestic. Our economy's growth has been coming down consistently over the past 6 years. We used to grow about 4%. Now we are lucky if we grow 0.5%. The latest IMF prediction suggests 0.7%, and we still have to see that. So I think any economy that doesn't grow can only expect a depreciating currency. Yeah. And that's the reason why the rand is being hammered both internationally and because of the local factors.
Yeah, which is quite frightening, because it leaves us in a very difficult situation, as you've explained. We also look to interest rates to try and help us a little bit, but that's also a difficult position to be in, to raise interest rates too much, to keep them low. You know, what do we do in a situation like this? Because many are expecting that interest rates are going to go up on Wednesday.
Absolutely. When the rand loses 30-40% of its value, it means that all the items that we import, whether it's medicine, whether it's machinery, whether it's foodstuff, now is going to be so much more expensive. And of course, that means consumer inflation is going to go up. And when that happens, the Reserve Bank has to respond. So I think we can expect that interest rates will go up. Of course, on top of it, internationally, interest rates have been low for too long, since 2008, and now the cycle is turning up. So even if inflation didn't go up locally, we would see global pressure for interest rates going up. So I think we can expect the Reserve Bank to bump the interest rates. My own view is that they would be very cautious. They're not going to increase interest rates by too much. Although the currency would suggest that maybe there is need for 50 basis points or even 1%, my own view is they will keep to 25 basis points, which is already quite cumbersome for the consumers that are under pressure in any case.
Indeed. So you're expecting about 25 basis points. That's your prediction for interest rates, the hikes now at this point.
Yeah.
Okay.
Yeah, but of course, it's not going to be the last one. No, it's going to be a series of 25 basis points. Yes.
Yeah, one can imagine. I mean, this is throughout the year. That means car payments are up, house payments are up, whatever debt you've gotten yourself into over this festive season, that's also going to be a lot more in order to pay. So it just is, in a nutshell, I mean, if we look at this year ahead financially for South Africans, food is going to be higher. Electricity is going to be higher. We find ourselves in a very difficult point with water. You know, what advice do you give to South Africans at a time like this?
I think we need to, as citizens like you and I, we need to take this very seriously, not wait until the perfect storm arrives. We must start rearranging our expenditure. We know food prices are going to go up. Some items by 60-70% has gone up already. And most importantly, the price of maize because of the drought. So, of course, the sooner we take what they call it preemptive corrective actions, meaning rearranging our debt to the extent that we can, rearranging our expenditures to make sure that we go from whatever we're consuming to something else which is a little bit less expensive, the more we save now, the better we'll manage in the next 6 to 12 to 9 months or 12 months ahead.
Indeed. Let's leave it there for now. Thank you so very, very much for talking to us here on the programme. An economist in our Cape Town studio, which, by the way, last week the JSE said it's opening an office in the mother city. Is this going ahead, Iraj?
I'm sure it is. The JSE has to reach to its clients, offer more services, and I'm sure it's a good move.
Interesting. All right. Thanks so much for being with us here on the programme.